Well, so far the Royal Commission has been a train smash for bank share prices, but we think that ultimately the recommendations won't have as big an impact on earnings and ultimately valuations. That's because we think that the Commission and the government will be quite mindful of the potential damage that it does to the credit creation process, which is fundamental to the economy, and therefore they'll be quite wary of unintended consequences around that. The bigger issue for the banks at the moment is really the slowdown in credit growth and how they cope with that. And we think it's going to take some time for them to really address that by cutting costs and returning capital. We're underweight the sector at the moment, and when we see those things start to occur, we'll be a buyer. Yeah, volatility is rising this year, and we think that trend's likely to be sustained. The Federal Reserve has turned from quantitative easing, which has been a dominant factor in markets for the last 10 years, and we've now got quantitative tightening. Because the US is growing above trend, inflationary pressures are rising, and tax cuts are about to be piled on top, we think that they're likely to have to continue to tighten at increasingly large amounts, and so that's likely to change the volatility regime. We've already seen examples of that. I think the fallout in emerging markets this year is a direct consequence of this action, and we think that with the ECB likely to tighten or stop easing later in the year, that will only further this. Yeah, we favour the oil and gas sector. The sector's become more popular with investors over the last 12 months, but we think that there's some way to run in that yet. Firstly, the oil market is in deficit, and the supply response is lagging. There's only so much growth the US shale industry can provide, and we haven't yet seen much of a capital response from other countries. The stocks we like, Oil Search, Origin and Santos, have all repaired balance sheets and are now uncovering quite significant growth options. They'll return to paying dividends in the current year, and we think the prices don't really even reflect current oil prices.